Hi everyone. As this slide says, if you want to trade like a pro, stay tuned. In this video, we'll cover classic reversal pattern like the head and shoulders and inverse head and shoulders. We'll learn how to identify these patterns and use them to enter trades with lower risk and higher potential profit. In this section, we will cover classic chart patterns. These patterns are divided into two categories: reversal patterns and continuation patterns. Reversal patterns indicate a change in market direction, while continuation patterns suggest that the current trend will continue. Now that we have covered the two main categories of classic patterns, let's move on to the next slide to better understand what classic patterns are and how we can apply them. Classic patterns in technical analysis are price formations observed in historical data that help traders project future price movements. These patterns help identify trends, whether they are reversal patterns or continuations patterns, which can indicate change or continuations in the market trend. Easy to understand, applicable across all markets: Forex, stocks, and crypto. Now, let's dive deeper into one of the most critical categories: reversal patterns. Reversal patterns are one of the most important tools in technical analysis. They help us understand when a trend might be coming to an end and the market could be changing direction. Basically, these patterns act like traffic signs on the chart, telling us it's time for a U-turn. If we learn to recognize these patterns correctly, we can make better decisions in our trades. Now, let's dive into the different types of reversal patterns. That we know the different types of reversal patterns, let's start with the first one: head and shoulders. Today, we will focus on this pattern and explore how it can help us identify trend reversals. Now, for number 2 and 3, we have the double top and double bottom patterns and the ending pattern. Don't forget to like and subscribe, as I will be cover these patterns in future videos. Let's take a closer look at one of the most well-known classic reversal patterns: head and shoulders. Now, we will discuss the key points about head and shoulders pattern. Reversal pattern that signals a potential change in the current trend. The structure, it consists of three main parts: the left shoulder, the head, and the right shoulder. In the world of trading, the neckline in the head and shoulders pattern is seen as a key point for decision making. When the price breaks through this line, it can signal a good opportunity to enter the market, as this change in direction often marks the start of a new trend. In the world, when the neckline is broken, it can act as an entry point for selling or buying in the new direction. This concept helps traders take advantage of market change and manage their risk more effectively. To draw the neckline, simply draw a horizontal line connecting the low point of both shoulders. This line marks the breakout point, which can act as a signal for a trend reversal. Market implication indicates that the momentum of the prior trend is weakening. Volume typically decreases during the formation of the pattern. A breakout is usually accompanied by higher volume. There are 2 points of entry points: Entry point is determined when the price breaks through the neckline, signaling a potential trend reversal. I consider a low-risk entry point when the low of the right shoulder is broken downward. How do we place the stop loss? In a head and shoulders pattern, the stop loss is typically placed above the right shoulder, while in an inverse head and shoulders pattern, it is placed below the right shoulder. How do we determine the target? The distance from the head to the neckline is projected downward or upward for an inverted pattern to estimate the target price. Since the head and shoulders pattern is a reversal pattern and usually forms at the end of a trend, higher targets can be considered, which could include the support or resistance levels that act as static price levels. Now let's move on to the important points that are highly useful in trading. The slope of the neckline should align with the direction of the pattern. The strength of the move should be taken into account in these patterns. Always confirm the pattern with additional indicators or price action. For example, MACD, divergence, the head and shoulders pattern, like other reversal patterns, forms at the end of a trend, signaling a potential reversal, not in the middle of trend. Let's look at some examples the chart together. If you enjoyed this video, please like and subscribe. Your support motivates me to create even better content for you. In the next videos, I will dive into more reversal patterns like double top, double bottom, and ending patterns. Feel free to ask any questions in the comments, and don't forget to practice the head and shoulders pattern on your charts. Until next time, take care.